What is going on, everybody? My name is Lamont. Been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll go over the overall market and cover some of these hype sectors as well. Hit you with some trade zones and give you a bigger picture look as to the state of the market at the moment. So, without further ado, let us get into it. I'm gonna switch the order now and start with the overall market because it's all fun and games playing in the hype market sectors and whatnot until, of course, the overall market is weak. It's very hard, for individual names, individual sectors to go against the overall market. So, let's cover these first, and obviously we'll do the timestamps as normal. So if you still only care about the hype sector stuff, you can just use the timestamps in the description. So let's get into it. If you'll recall, the the video from 2 weeks prior was sellers created notable change, or bears created notable change. I forget which term we used. And will they build on it, right? And then last week's was they advanced. How far can they get? So in this week, they let us know they're trying to get kind of far. But how far are they going to get? What do we really care about? What we really care about primarily is the 2021 high. And this chart is kind of messy, but this is the 2021 high, right? At 4818.62 on the SPX. This is absolutely what we care the most about, because what the markets should do, if it is healthy, right, is it's going to back test this area and try to hold above it. Now, we do have this big old area over here that we can be monitoring, and fair enough, I do have that marked up, I believe, for the SPY. Yeah, I've got this whole big guy marked up as well. There's a little guy over here as well. But on the way down now, essentially, you only have these two areas left. You have this demand zone from February 2nd to 21st. That's when it was established. And then this one from January 2nd to February 1st. So these two are the only two demand zones left in the way before a test of this 2021 high for the SPY without adjusting for dividends. Oh, that doesn't matter, actually. 479.98 is where we're at. Was what we're looking down at. So if these sellers cannot get back under the prior high, well, then what does that mean? That means that the higher prices relative to the old prior high are being accepted. So again, if we just look into markets, bigger picture, if a market is going to remain strong after a breakout like this breakout over this high, what it needs to do is hold the back test of the prior high. Doesn't have to be a perfect back test, but that's essentially what it has to do. And you can see how this low is pretty much right off with a breakout high over here. It happens time and time again. For example, here's another breakout. Where is this low? Pretty much right off of this high. All right, here's let's see. This is not super clean, but technically this is a breakout from this area, and all they did was back test it. So anyway, that's the idea. Bigger picture, this is just simply how the market has to work, right? And so if this is going to be a much bigger scenario like this, right? Because, bigger picture, the SPX does happen to have a habit of balancing longer term, right? Like this is a huge megaphone. This was many years of balance here, right? So the idea then is, if we're going to get something like this, a break with no follow through, the first indication of that is to come back under this low, right? So same deal here, right? We are open to the potential that will come back into this range, but you have to call it for what it is. As long as we're over the high, this prior high, that's not what's happening right now. So lots of space for a monthly higher low still. And let's talk about a little bit about what we should be looking out for. Because the best case scenario would be if these sellers do not even touch down on the 2021 high, right? Because that would suggest then that they fail to try to negate the breakout that began here. This breakout over the 2021 high, not yet negated until they can get back under it, right? And so we'll pay attention to these, because the idea is this, right? Even if we trade into this structure, if you will recall this big weekly low, right? This major weekly low, where was it made? It was made off of this guy right here, right? So the idea is this then, right? We have this major balance, bigger picture, this is a weekly time frame. We have this major balance. The best case scenario for these buyers, right, would be don't come into this zone at all, right? The best case scenario would be, all right, they try to get back under this 2021 high and they fail and they can't get it going. And then all of a sudden we start balancing and then breaking out again and balancing. That's the best case scenario. The next best case scenario is to find acceptance back under this 2021 high, but don't allow any acceptance through this guy, because this guy was the problem here and here and here, right? And so as long as you're trading over this guy, then we're not coming into this stage. That's this kind of price action. That's this kind of price action. If you do drill under this guy, right? If you do happen to drill through this structure, huge red flag, right? Because now we can look for potential lower high, and then we would expect something like this, right? The next worst case scenario is to drill through this, right? Because drilling through this opens up this. So now our key structures that we care about on the weekly time frame are these guys, and I guess I could just have it just left on the weekly, but no, I like the detail on the daily. So now it becomes this guy, and this guy becomes super key in the short, I guess, intermediate term. All right, so that's pretty much what we're looking at, bigger picture. Now, regarding these two daily demand zones, like we were saying, the best case scenario would be to not get back down under this 2021 high. If that is going to be the case, it would stand to reason that these are the areas where these buyers should look to defend. And now that they have traded through the point of control of this demand zone, we should expect them to try to get here, 490.92, where there's also a decent amount of volume traded as well. Now, if we do get some bounce in the next week, the bounce will do really no change, right? I mean, technically you see no change until you get back over here, 512.76. There's no change relative to this breakout unless you get back over 503.02. So there's a lot of work that the buyers need to do in the short term in order to get back into even a defensive posture. But as of now, if you do bounce here and you can't get back over 497.99, that's going to keep the sellers the absolute most confident, and then that'll have us continuing to look down here, look here, and then here, 487.34. There's one more high volume area right here at the value area low of this structure, 484.10, and then into 2021 high. So very clear areas where there was much more volume traded on the way down. These are our key areas to look out for some potential bounce. Now, this is the first time that you're going to see, or you're flirting with daily oversold in a long time. So technically a bit of a back burner trade. This is the first one. Whether or not this turns into a major low, the first daily oversold bounce, we should probably see a little bit of juice. Even this one, like, wasn't even that much longer for another. I wouldn't even consider that a back burner. I would say the last back burner that we saw on the daily time frame is probably this one, and that was quite a bounce. So that's that's pretty much it in a nutshell what we're looking at for SPY. So these sellers are very comfortable. Even if we see any bounce next week, tons of space for a lower high under 519.4. All right, and we'll just watch these guys on the way up. Remember, no change unless you get back over 503.02. You won't negate the change from this breakdown. And then unless you get back over 512.76, you don't negate the change from this breakdown. So again, buyers with a lot of work to do. All right, that is pretty much it for the SPY. Yeah, that's pretty much it. And then for the Qs, drilling even harder here. There's only one more structure left for the Qs. That's this guy here from 1212 to 117. The point of control at 408.71 is pretty much, it is the prior high. That prior 2121 high is the exact same level as the point of control of this structure. So the market's kind of already hinting at us that this is super important, right? Because if you trade under 408.71, then obviously that is the that's not the ideal situation anymore for the buyers. The buyers' best case scenario, don't even touch down on 408.71. So next week, if they get caught up here at the value area high, 411.41, and then don't touch down on 408.71, that would be the best case scenario for these buyers. All right. So that's pretty much it. Again, flirting with daily oversold. It's the first time we've seen daily oversold in QQQ since, wow, it's been a long time, since September of 2022. That was in the bear market, so near the lows of the bear market. So very notable, definitely a back burner in play. So yeah, that's pretty much it. We're definitely looking for some short-term bounces in the next week. I would be surprised if within 2 weeks we didn't see a bounce. You probably get it next week, honestly, right? Because you're the first time you're daily oversold. There's key structures here. I bet you even if we crack under this 2021 high, I bet you there's some balance here. Like I don't know that, right? I'm not trying to make any predictions, and how we'll assess that is just how price responds to these levels. So if it cuts right through 408.71, makes a lot of follow through under it, all right, then we're probably going to be looking for a potential lower high off of it. But if it doesn't cut through and it breaks with very minimal follow through, you're probably going to see a snapback over this and look to back test this structure here. All right. So if holding over 408.71 and 411.41, eyes on 421.64, sellers will still be very confident if they can hold under 421.64. All right. So that's pretty much it. Anything under 446.33 going to be good for a daily lower high on the QQQ. All right. Yeah, that is pretty much it. So, I mean, just like sear this into your brain, you know, like this. Remember what the videos were, right? There were a lot of warning. 2 weeks ago, it was sellers created notable change. Last week, it was how far can they get, right? This is the way that you want to look at it, I promise you. If when you have an area of supply and you break down from it, so you have this supply, you break down from it, that's always step one. Step two is to trade through an area of demand. So now we should be looking out for the opposite of this for buyers, I mean, right? Now what the buyers have to get done is create an area, break out over it, right? Hold the back test of it, and then trade through in the local area of supply, which is here. So the buyers have a lot of work to do right now. They need to do this, break out, and then get back over this to say that they're back on the offensive, pick up where they left off, trying to back test, hold back test of this guy, and trying for new highs. All right. I think we have conservative trade zones as well, actually, before we move on, right? Maybe not. Oh, that was the sell. Well, that's just the bust now, right? So that came, oh, that was already a bust from last week, right? 1, 2, 3, 4, 5. No, this is a new one. So this was a conservative trade zone that was just based on whether or not these two will hold. So obviously that's no good. Came into our trade zone, bounced, should have been enough to chop it up, get risk free, and now it's a stop out. All right. I mean, if you're trading it blindly. Okay, so with the levels here, I mean, which, you know, obviously we don't do. We prefer to refine our entries, but obviously I still see you guys once a week. So I try to give you the, you know, most conservative zone for the week. All right, so for the Qs then, same deal, right? We were playing here, very reasonable to make these plays as long as there was no acceptance under this 432.74, 1, 2, 3, 4, 5. And so as soon as you start seeing that crack, these are red flags. That's why our stop zone is here. All right. So that's pretty much it for the Qs. At this point now, right, like I think it's very reasonable to be looking for plays like this, right? This is a new trade zone, very reasonable trade zone. You would get very oversold if it were to straight drill from here, and then just have your stop under here, somewhere under here, and you're just trying to get back here. So something like this, pretty reasonable, looking for an oversold bounce play next week. All right. And obviously, if you're a bit more active trader, then you're basically just looking for your lower time frame setups while we're in the trade zone, right? This is the zone of interest. Look for those low time, just like how Dan does it, right? When the things get interesting, the RSI is extended, they're coming into a 12 VMA, that's when Dan is looking for these day trades. You know, same deal. That's what we do. So the Dow is a just barely kissed this you know, our conservative trade zone is essentially looking for a potential hold of this structure. If they hold this structure, they should be trying to come back up here. There's a good amount of space for a daily lower high to be set under 383.82. This is potentially a daily bear flag. Not a very strong bounce. 1, 2, 3 higher highs on the daily time frame, but no follow through is a bit of a red flag. If the buyers can't get in, you know, start putting some work in next week and get acceptance back over 383.11, and technically they don't even create change unless they can get back over 385.60. Any bounce next week that doesn't get back over 385.60 means very little. All right, even if it breaks to a higher high over this high, if you can't get back over 385.60, it means nothing. So this is a reasonable trade zone. I don't love it as much as the Qs. I prefer it on the Qs because it's not as extended. The Dow is just not as extended as QQQ right now, and it's already bounced for a little bit, cooling off that daily RSI. So we do have to be mindful of that too, right? Like if we get a super weak bounce like that, if the SPY and the QQQ get a weak bounce like that, like the Dow, that would be a pretty big red flag. All right. Okay, so IWM, this was our hedge play from way back when. I think we have a conservative trade zone as well. So it's now entering our conservative trade zone. Conservative trade zone still makes a lot of sense, right? Because it's really all about this guy. So this fellow over here, that's this one, 12.4 from 2020 to 12.14. You'll notice that this structure is what made these lows here, right? These lows here. And then once it flips into resistance, really good hits off of the point of control. It's a battle for it here. Hold the back test of it, hold the back test of it, but then lower low, clearly telling you it's problematic here again. Clearly telling you it's problematic for these buyers here. Clear battle for it, right? Rejection from that upper structure here. Very, very clear that the market, the market is straight up telegraphing that this is a very key structure, right? Major high made here, major highs made here, major low made there, POC backtest, blah, blah, blah. So the idea then is this, right? As long as we're holding over this structure, then we should expect another test of this. Hard to ignore that this is potentially a big old head and shoulders pattern here, right? Starting to see a lot of these, pop up. And so this play is essentially just trying to get to another head, right? Excuse me. I'm just trying to get to another shoulder. I guess it could be another head too, right? Like if it's a shoulder, head, and another shoulder. You never know. Anyway, so that's the idea, right? Like I don't care so much about the pattern, like the classical patterns. It's fine. Like we'll consider it a potential head as long as this structure here is this supply here is resistant. But it is just looking for a monthly higher low when you are just back testing this area over here, right? So if they could hold over more or less these highs, right, then we should just be expecting more of this kind of price action, which is why I have this low over here too, 187.92 marked up, right? Again, very reactive level. It looks like it was the high of day on this day. Wow, really, it was perfect to the tick. So anyway, that's what we're looking out for the IWM. If we start finding acceptance under 187.92, that's not good. That would essentially open up all of this price action. So acceptance under 187.92 opens up a test of 162.72. Obviously, there's a lot of demand that was created on the way down. This guy over here, this guy over here as well. But that would be their objective if we can get back under 187.92. All right. All right, so let's see here. For the dollar, so the dollar still testing this major point of control. Pretty much spent the entire week trying to resolve this supply. Whether or not they find acceptance over this supply should have implications on the market, right? Because if the dollar were to start making new highs relative to 2022, that would put some pressure on these asset buyers. So very healthy daily consolidation right now for the dollar. If we do higher high over local resistance 106.325, it's pretty much a move over this point of control 106.335. Should have these buyers trying to come here 106.970. Acceptance over 106.335 again would be a bit of a red flag for asset buyers. All right. And these sellers will create no change without getting back under 104.840. Buyers are very comfortable in the dollar right now. So the VIX ripping over this 1544 level, that's that October level. But finding some resistance here. So if we start seeing the VIX move back down to 15 or so, the market will probably try to stabilize a bit. And if we can get back under 1544, then it's probably right back to looking, for buyers back in control. So just maintain eyes on 1544 for the VIX, and then the key resistance at 23.08. Would not be surprised if we just chop around in here. So basically with a little bit of an elevated volatility environment, as long as we're over 1544 relative to, the relatively low volatility that we've seen throughout the bounce since the October low. All right. All right, so let's get into these semis and the hype sectors in general. I think starting next week, I'll probably remove SMCI because NVDA, SMCI charts are practically the same, and I think NVDA is probably going to be a better bellwether than SMCI. SMCI's model is has a much lower barrier of entry. Like in terms of durability, probably if you had to pick, you probably want to pick NVDA in terms of durability, right? Because the competition against NVDA is much rather NVDA as a competitor is much stiffer compared to SMCI. SMCI is just data centers, right? So yeah, let us see. I mean, that's my opinion, right? I'm no fundamental expert, but if it were up to me, I would pick the innovators as opposed to the businesses that are building with the the NVDA, the innovators tag, all right? Which, if I understand, if my layman's understanding is correct, please correct me if I'm wrong in the comments. Let me know. I would love to learn from you. So anyway, for NVDA, all right, so we had this conservative trade zone. It did come into it. It did bounce to our target, but now it's pretty much flirting with stopping us out here. If you're a Swing Report subscriber, you'll know that I mean, I may have talked about it already on these market wins video. I forget. We do so many videos, but last week I was talking about, hey, listen, I'm probably gonna pump the brakes. I did take one stab at a trade idea last week, but as soon as it didn't stick, I was done with it because at that point in time, the QQQ had not yet turned. It was like on this day, and we were still more or less like here, somewhere still like kind of okay, and then it dumped for the rest of it, and I was okay, that's it then, right? Because that was the notable change that we were looking out for. We needed to see acceptance under 437.51. Up until then, it was a battle for these two structures, So as of right now, I'm thinking any kind of buys. They're aggressive buys. I'm more focused on the QQQ right now. Individual names, I would rather wait to see the market kind of settle a bit before we try to make any plays for these individual names again. The environment has shifted. It was pretty much easy mode since October for longs, I mean, and now it's not as easy mode for now. But historically speaking, market is probably gonna be okay, right? Like historically speaking, the market goes up and to the right. Does it have to do that forever? No, but if it stops doing that, we probably have bigger things to worry about anyway. So, like food, water, and ammunition. So anyway, for NVDA now, we have another gap to fill from here. Let's from here. That is 74220 down to 688.88, which is like a super lucky number if you have any Chinese descent. Anyway, technically the daily no change level is now here. 830.22, buyers create no change unless they can get back over 830.22. And so this is probably also a daily backburner. It should be. This is the first time that we're flirting with daily oversold since it didn't even get there in September. The last time was in October of 2022. So I would be surprised if we didn't see at least an initial balance in the first hourly oversold. That is the backburner trade, one of Dan's favorite setups. It's no guarantee, but it's a high probability situation. So anyway, the idea now becomes this gap fill, right? Like how bigger picture, the NVDA sellers can get all the way back down to 502.66 and still not negate the change from this breakout. Now, it wouldn't be a great move if they were to come back all the way down there, but it happens all the time. Like even this tiny little flag here is what supported price here after this, like, I don't know, 40 or 70% retracement, right? At this 70% retracement, where does it, where do they defend? It's right here. Same thing with this, like this low is just a backtest of this balance, right? This is also just a backtest of this balance, So that's the idea. They can get all the way back down there and structurally still be okay. So we'll just pay attention to that bigger picture. Again, that high is at 502.66. Now, the best case scenario, right, is instead of, wait, can I have this here still? No, I cannot. All right, how am I going to do this? I will move all the groups here. I will sync all these drawings. Oops, hang on a second here. All right, so now that that's all cleaned up, that high is here. All right, oops, it's actually here. 505.48 is actually level, right? So either we're going to come all the way back down here, right, and test to see if there's still a good amount of demand coming out here, which I would be shocked if we cut through it like butter. That is not very likely to happen. It could happen, but it's not very likely. Typically, even if they do trade through a prior back test, it takes a little bit of time because there's still demand here. Sellers have to absorb all of that demand and then keep selling in order to trade through it, right? So that's what we're looking out for now. 505.48 super key. The best case scenario, just like with SPY, right, would be if instead of coming all the way back down here, we start bottoming out here. And so, well, actually, let me draw this a little bit better. So what we should be expecting now, right, is the sellers are having their go. They're going to try to do this, blah, 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 right? And as soon as we start seeing a lot of overlap in these balance areas and then a breakout over an area of balance, now we can look for plays. If they fail to come down here and then that happens, right, where you break out over an area of demand now and then start balancing, all right, we'll start being aggressive, bottom fishing off of these highs here, stop under here, seeing if we can just EQ or balance, chop around over this guy, but under the record high. That's probably what we're looking out for, right? That, well, I should say that's the best case scenario for buyers. And given how much space there is, I would not be surprised if I would be shocked if they don't attempt that first. Just like here, you know, breakout, balance, breakout. They fail the back test here, right? But we still have to take a shot there. You know, we'll take a shot there because this could have easily been a higher low into a higher high. It wasn't that time, but that's trading, you know? So anyway, that's what we're looking out for NVDA. Lots of space for a daily lower high under 887.75. And that's really it. You know, you can mark this up as one area of balance at this point now. You don't have to make it so exclusive. That was probably of old. Did I say that right? I don't know. Let me know in the comments. Let's see. All right, yeah, I like it like this now. All right, so we'll watch this whole area of balance as well. And that is pretty much it. Only a few areas where there was a good amount of volume traded on the way down. So the next one is at 730 and then 681 and then 616-ish. All right, so that's pretty much it. This one's going to be a doozy of a video, I guess. We're only at NVDA. Maybe we'll just scrap SMCI now, right? Because it's really the same chart. SMCI, same deal, right? They can come all the way back down here and it would be fine. So that would be, let's see, off the highs, that would be a 70% retracement. And structurally, it would still be okay. I'm sure we've seen this happen before. You know, we just have to look left. Like here, that's a perfect example, right there. Right, you see this little rinky-dink flag right here, right? And then what happens? They break out of it, right? And then they pretty much just come and hold a back test of it. And that's still fine. That's probably like a 50% decline. Yeah, that's like a 50% decline. Yeah, this kind of a deal, you know, happens all the time. Here's another one. There's another one right there. Right? Here's another little flag structure, right? Big old retracement. And what do they do? It's a 50% retracement, more or less. And what do? They try to hold it, right? They try to defend it. So here's where our plays are going to be. Our low risk plays are going to be, even if they don't stick. This one doesn't stick, but that's a heck of a bounce. That's a heck of a bounce. Even this one is a heck of a bounce. That's still 20% bounce. And then ultimately we'll get stopped out here once this low gets taken out. No problem, you know? So anyway, that's pretty much it for SMC. I don't want to waste too much time covering like pretty much the same concepts. All right, so I'll probably just cut this from next week. I'm more interested in what NVDA does as a bit of a bellwether. Maybe we'll swap out SMCI for SMH. I don't know, we'll see. All right, so Bitcoin's, it is doing its best to offer some kind of inspiration to these market bulls because 61003.36 continues to be supportive. Now, that being said, there is a, you know, it's a weekly lower high and lower low on the daily time frame. You know, if you don't consider these little rinky-dink daily lower highs, you know, technically there's a lot of space for these sellers to defend, right? So we have this little hourly guy that's marked up, right? Do we have it marked up? Oh, I thought we had it marked up, but I guess not. This guy's obviously the key right now. So, you know, again, bigger picture, it looks totally fine, right? Because the higher prices relative to this structure, which is a prior all-time high structure, are being accepted. Pretty much, if this is what SPY and QQQ do, right? If they just go back and just hang out in the prior high and like don't really trade through the structure, the overall markets are going to be okay. So despite the fact that this selling, you know, it looks aggressive, but again, that's the key. If Bitcoin just keeps hanging out, going sideways while this overall markets come back down and start doing the same thing, and then let's say that Bitcoin starts ripping out of here, maybe it's leading, you know? So just stay frosty for that. But 61003.36 is key, right? Because it could also just be laggard weakness, right? And so that's why our references are so important, you know? As long as we're seeing acceptance over here, we're not too worried, right? Cracks under 61003.36 that don't find acceptance under 58741.12 will be okay, you know? But You must call it for what it is. Supply zone here. The buyers don't create any change relative to this breakdown without getting back over 67463.07. All right, so that's their objective. Eyes on that next week. If they can't trade over that and then they get back down under 1003.36, that's a red flag. So they're playing defense here, but they gotta get back on offense. First, first level to get back on offense is over here, and then flip this into, support, because that would be new highs, right? So anyway, that's pretty much it for Bitcoin. Ethereum, much weaker, right? It didn't break to an all-time high. Did not break to an all-time high. So now we're just watching this guy, which is what supported price here, was problematic here and here. And it is notable that the sellers have thus far failed to get down to the value area low of the structure at 2799.87, instead getting caught up here, right? 286868, which is also a lucky number if you have Chinese descent. Anyway, and you'll notice the backtest of it here. So obviously this structure is being pretty key. This guy is pretty much proxy for the value area high backtest. So if they can't trade through this guy, then obviously they're not going to touch this. If they're not going to touch this, then they should be trying to come back here. It's very clear, right? If you hold this area here, they try to come here, right? You hold this area, where do they fail? They come here, So you trade through this guy, right? You trade through this guy again. Where do they go to? And they have problems first right here, right? They get over it, and then as soon as they get back under it again, problems, right? So that's pretty much it. All about 3202.80. Buyers need acceptance over that to negate this breakdown. And if we do see lower lows under 2868.68, eyes on 2799.87 and then 2570.27. All right. Just looking for a monthly higher low. Weekly lower high and lower low, no follow through, and didn't get back to the last breakout point. So again, defensively, looks okay. We'll see. CCJ. So CCJ, I'm pretty interested in this one. Again, I would very much like a reload. I'd probably wait for earnings to pass first, but the calls we did over here were amazing. Like I forget, like 200% or something like that. So I would love it. Those options, like they moved really well, and they were cheap, like $1.50 or something like that. So I'm interested. I would love to see a move under 44.47, not see follow through, because then we should just expect more of this kind of a price action. Daily lower high has now been set at 49.66, and it's hard to ignore that this supply over here continues to be problematic, right? This supply over here sitting at all-time high, rejected price over here. And now we have rejected price again 4 times, really. So if we continue to see acceptance under 49.26, break to a new low under key support 46.27, eyes on 44.47, and then if under that, then eyes on 42.31, it's really just ping pong, right? It's just ping pong off of this big structure and this tiny structure, which technically is part of the big guy, But the idea is, as long as you're holding over the point of control of this big guy, that's very notable defensively, right? That just means that higher prices relative to this structure so far are being accepted, So that's pretty much it. Lots of space for a weekly higher low. Anything over 39.02 is going to be good for one. So essentially, any buys that we make are in CCJ are looking for that weekly higher low. We can pretty much use this entire structure as a trade zone, but we'll just have to see what comes up here first. All right. So April 30th. So it's actually in 2 weeks then, right? Yeah. That's pretty much it. So I'm just gonna wait to see what happens here. Really, probably wait till after earnings, but we'll see. All right, so TAN this is as weak as it's been in quite some time. As we were saying, it was a bit of a, as we were saying recently, a bit of a red flag. The buyers couldn't find acceptance over 45.20. Now here, back testing 39.98. That's the point of control of this major structure over here. This guy clearly told you it was important here. Clearly told you it was important here. And then it's been a battle for it, right? So it's just between this guy and this guy. And so if we zoom in, the stop for this is just a little bit of wiggle under this 38.80 low, and that's just this low over, rather the prior high over here, because we just want a little bit of wiggle room. If we how we can determine how much wiggle room, we don't want to come into this prior structure, right? This is a pretty good proxy for the VAL. All right. And honestly, it's already come in and out so many times that, you probably have a risk-free position now if you're using this trade zone, right? So that's really it. Daily lower high and lower low, not that much follow through at the moment. Going to be all about 39.98 next week. If lower lows, eyes on 38.80. If you don't see acceptance under 39.98, we should expect another move right back to 45.20. Try to resolve all of this, but first things first, you need acceptance back over 40.15. So if we start seeing acceptance over 39.98 and 40.15, opens up all of this kind of price action again. This could just be a lower low with no follow through, just like this was a higher high with no follow through, just like this was a higher high, no follow through. So we'll see. Okay. Again, I am being very hands off right now. It's really just the QQQ bounce that I'm focusing on. Individual names, not so much until the overall market can bottom out a little bit. I'm open to sales now. 2 weeks ago was the first time that we had sales on. It was call it the flipping. Oh no, actually, that was last week. That's what, right? So every week we had planned. We go through the process, and last week was the first week where our ideas were sales. All right, and Funko was, oops, I didn't do the whole thing, and Funko was joking, calling it the flippening, and I was just saying, dipping our toes, trying to have some fun while we do, the work. Anyway, so that's pretty much it for 10. And then finally for MSOs, I believe finally for MSOs. So MSOs, no real change to this, right? It remains, this is the key structure, right? Because as long as over this, that opens up all of this. And this is just the next area of supply, the backtest of it at least, that has been problematic. So it's still all about these two structures. And, it's really do or die time, right? Look at this pitch battle to try to hold over 9.37. So much battling for this structure right now. They try to hold back test of the POC. They try to hold back test of the POC. It flips into resistance. They set the lower high off of it now. So if you lower low, eyes on 8.28. Super key level because this was the last lower low here that didn't see follow through. And then they snap back over it. And so if their buyers are going to keep playing defense here, they shouldn't allow too much acceptance under 8.28. And if they do find acceptance under 8.28, well, then we should pretty much just expect more of this. Basically, acceptance under here, 9.37, we should expect this kind of price action, right? So not a great look, honestly, for MSOs. Not a great look. To see that monthly higher low, higher high, no follow through, I mean, it's still 9 days in a month. Not the best look. Weekly higher low, higher high as well, no follow through. We'll see. But it's not looking great. Okay, but this one already came into our trade zone, hit the target, I think once or twice. So yeah, we had another setup in here. So, it should be okay here, but again, hands off, right? Like the hype markets, right? They're not hype right now, right? Because the overall market is not hype. So like a hype market is a scenario where it's the names that are getting the most attention when the overall market is also strong, right? So risk off for now, and we shall see. We'll take it one day at a time. Again, remember, what we're waiting for now is either what's going to happen at the prior high, or can these buyers do the reverse of this now? Now they need to do the reverse of this. Sellers created supply, broke down from it, and cracked an area of demand. The reverse must be true now for the buyers to get back on in the driver's seat. Create an area of demand by breaking out of a balance zone, hold back test of it, and then crack through supply. That's how we'll know it's back to buyers in control. Anything shy of that, sellers are still confident. Okay, so it's a doozy. That's it. If you've made it this long, man, if you could give us a like or subscribe, we would appreciate that very much. It definitely helps us to continue offering this free content, which I hope you found valuable, honestly, right? Like, you just check the titles of the videos. 2 titles ago, I think 2 weeks ago, bears created a change, right? Last week, okay, they're advancing now, right? We try to give you as much warning as possible, give you the best context for a very objective view on the market. We're never trying to hype anything. That's how our community does it. So if you're interested in joining a community of traders, full-time traders, super supportive group, get information from Dan, get information from Lori, Funko, myself, the rest of the team, 1,000 traders in our group. Links in the description below. That is it. So I appreciate you sharing some of your time and energy with me. And I hope you enjoy the rest of your week. And I hope to see y'all next week. Farewell.